నేను ఒక అరగంటలో చేస్తాను సార్. రైట్, అలాగే. షిరిన్ గారు, నాకు స్క్రీన్ షేర్లో ఉంటాను, అది కనపడను. ఒక్కసారి కనుక స్పీకర్ గారు వస్తే కనుక, రిసోర్స్ పర్సన్ వస్తే ఒక్కసారి ఇన్ఫార్మ్ చేయండి.
Has not yet joined, sir. I think it's better to make a call.
ఆల్రెడీ ఫోన్ అండి, నో ఇష్యూ. మేడం వచ్చారా మేడం? సార్ వచ్చారా? పార్టిసిపెంట్స్ లో ఒకసారి వెరిఫై చేయండి. ఆర్కే సార్ రావట్లేదు మేడం.
ఓకే ఓకే. నాట్ జాయిన్ సార్.
కాల్ చేస్తున్నాను.
Sir, join, sir. Sir.
Yeah, okay.
Samar.
Yeah. I have joined, ma'am.
Sir, good evening, sir.
Good evening, sir. How are you?
Doing good, sir. Great. It is pleasure to meet you and virtually. You came to Vijayawada so many times as a faculty for the GST course and everything else. And Shirin ma'am is there.
Video में बंद करेगा video.
So shall I share my screen?
One second, sir. I'll just introduce the things and go ahead with the things. Okay, Shirin ma'am, go ahead.
Respected Chairman of Vijayawada Branch, CA Godavarti Srinivasa Rao, and today's resource person, CA Shaikh Abdul Samar, and other managing committee members, and past chairman of the branch, and fellow members of our fraternity. Very good evening to one and all. Our hearty welcome to you all for the 4th day of 5 days virtual refresher course on practical aspects of GST, organized by GST and Indirect Taxes Committee, hosted by Vijayawada branch of SARC of ICAI. Hope yesterday you would have updated on how to represent before GST department with the excellent presentation by resource person and Bharat Kumar sir. We will be having technical session to be dealt by CA Sheikh Abdul Samad to enrich your knowledge on the topic GST departmental audit and its related documentation. Now, I request our chairman, sir, to speak few words.
Good evening, ladies and gentlemen. Welcome to the fourth day of the refresher course on the practical aspects of the GST. We are glad to have Samad sir in this session. He was dealing with the excellent topic, departmental audit, and what are the documents that are to be submitted in the departmental audit and other things also. He has prepared with the great guns. He is ready to shoot out with us. And I think is a small announcements for you all. Those who have started the videos, kindly observe some decorum in these things. Sorry to inform you, there are certain persons who are just doing other things while they are in the video on. And also don't keep all in the chat box your name and membership number and all these things, because it is not necessary. Your attendance will be marked accordingly as per your presence. There is no problem, absolutely. So kindly take care about those things, and remaining things will be hold good. Thank you one and all. And I request now our secretary Shweta Shirin to introduce today's resource person.
Thank you, sir. It's my pleasure to introduce.
Ma'am, unmute yourself. Unmute yourself. Sir, a small request, sir, because the crowd is very thick. I'm just making mute all so that your videos also getting muted. So I request you, both the people, can kindly unmute yourselves. Please, thank you. Over to you, ma'am.
Okay, sir. It's my pleasure to introduce today's resource person, CA Sheikh Abdul Samad. He is a commerce graduate and fellow member of Institute of Chartered Accountants of India. Presently, he is partner in Sanjeev Shah and Associates Chartered Accountants, Chennai, where he heads the indirect taxes compliance team. His area of expertise is service tax and excise, now GST. He is director in International Chamber of Indirect Tax Professionals, Chennai. He is an acknowledged expert on indirect tax, especially in the area of service tax, excise, and GST matters. He shares the knowledge at workshops and training programs. He has handled so many training programs in the area of indirect taxes for the officials of Government of India, which are Central Excise Chennai Commissionerate and National Academy of Customs, Excise and Narcotics Chennai, and the Commissionerate of GST and Excise Tiruchirappalli, and Commissioner of GST and Excise Tiruvannalai, and the officials of Government of State, SGST Mysore Division and SGST Tiruchirappalli Division, and also for so many professionals and students at SARC Chennai and various branches of SARC. With this brief intro, I request Sheikh Abdul Samad sir to present on the today's topic. Thank you.
Thank you, madam. Thank you very much. I hope I am audible to all. Yeah.
Yes, thank you. Audible. Perfect, sir.
Yeah. So my PPT is available on the screen?
Yes.
Appearing?
Yes.
My PPT is appearing?
Yes,
yeah.
sir.
Thank you. Thank you, sir. Thank you. Good evening to all, and today's discussion is on GST audit, which is conducted by the department officers under section 65. And during the audit, what all aspects the officers is expected to verify, and to verify those aspects, the officers will be requiring some documents, which the registered person has to submit to the officers. And to start with, we'll start with the basic provisions first. What is audit in GST? What is audit in GST? Section 2, subsection 13 of CGST Act had defined the term audit, which means examination of records, returns, and other documents. And why they want to examine this? Because they want to verify the correctness of turnover declared, taxes paid, refund claimed, input tax credit availed, whether it is in line with the provision of the Act or it is not. They want to examine these four aspects: turnover which they have declared, taxes which they have paid, whether they have paid the proper taxes, whether the ITC which they have claimed is a proper ITC as per the provisions of the Act, and to check whether the registered person has claimed a refund which is indeed available to him as a refund. And to verify this, he has to check records, returns, and documents. As I always say, GST is nothing but it's not a new act. It's an act which has been adopted from Central Excise. Even in Central Excise, manufacturers were asked to maintain certain records, okay, like RG1, RG23A, RG23C, service tax registers. Similarly, even GST has asked the registered person to maintain certain records, okay, and it is very much relevant from the provisions where they have told that examination of records, returns, and other documents maintained or furnished by the registered person under this Act. So this section has categorically stated that the record should be maintained by the registered person, and which has been prescribed in this Act. We will discuss of those records which is prescribed under this Act and which has to be maintained by the registered person, which has to be produced before the registered, which has to be produced before the officer to determine the compliance provisions of this Act. And why we want this audit? Why government has introduced this audit provision in GST? They have introduced this audit provision in GST because GST is self-assessment law, where the registered person by himself assess and pay the taxes which is appropriate or which is correct in his according to him. But whether it is correct in the eye of law, that the officer has to certify. Section 59 is the sole reason why section audit under section 65 has been introduced. Now, what are the areas under which a registered person self-assess himself? First area is registration. It is the person who himself determines whether he has to get himself registered or he is exempted from getting registered. Okay, so it is the registered person who decides it if he wants to get registered. And if he decides to get registered, then he has to determine whether he can go under regular scheme, under composite scheme, as input service distributor, as a casual tax registered person. It is he who decides it. But whether his decision is correct, that has to be ascertained, and that assessment has to be done by the registered person. In GST, we don't have such thing called assessment. We have audits. We have audits which will result into the assessments. Okay. And beside that assessment, whether to take registration, type of registration, apart from that, additional place of business, there will be a warehouse which will be there in the state. It is the responsibility of the registered person to get that warehouse also registered under the GST, because he has to move the goods from that registered premises. Okay. If it's unregistered premises, can he move the goods from that place? That is the big question which comes into the mind. Okay, if the person have an office and there is another office within the same state or within the same town, okay, and the shop is registered but the warehouse is not registered, is it possible for the registered person to move the goods from that warehouse? The answer is no, he cannot. Okay. Moreover, the definition which is there in the GST, business premises, that they have categorically stated that wherever you keep your goods, that place has to be treated as a business premises. Okay, so that premises also has to get registered. All those things will come into the loop when the department officer visits and verifies whether he got a registration for that unit or not. Okay. The second requirement, outward tax liability, outward supply. It is the registered person who will determine whether the transaction, okay, is transaction in goods or transaction in service. So far in VAT regime, in central excise regime, okay, the classification was whether you are a manufacturer or whether you are a trader. If you are a manufacturer, then you have to get yourself registered. If you are a trader, you have to get registered under state law. But in GST, that differentiation is not there. Now, the registered person has to identify his transaction. He has to assess his transaction, categorically check whether he falls under the supply of goods or whether he falls under supply of service. For example, a person manufacturing breads in the bakery, a person manufacturing breads in a bakery, supplying breads to the restaurants, whether he has to treat himself as the restaurant or whether he has to treat himself as a supplier of goods, because restaurant is the service, supply of service. Okay. Similarly, when the cold drink is sold in the restaurant, or I should say that when the cold drink is served in the restaurant, whether it has to be treated as a service or it has to be treated as a goods. So that classification has to be carried out by the registered person. He has to pay the taxes accordingly. For instance, cold drink, if you take, okay, if it is sold as a goods, then the rate is higher. But if it is a restaurant, if the person class restaurant, then the tax rate is only 5%. And if he makes mistake here, then there is a huge liability which is waiting for him. Secondly, nature of supply. Nature of supply, it is the responsibility of the registered person who is preparing the tax invoice to determine the nature of supply. Okay, it is he who determines what is the nature of supply. Okay, and nature of supply can be determined only when you are very sure what is place of supply of the goods or place of supply of the service. Today morning, I got a call from one of my client. Okay, I got a call from one of my client who were discussing, who wants to know if they do an agency work for a person in a non-taxable territory. A person who is located in Tamil Nadu, he wants to carry out an agency job, an agency work for a non-resident person, okay, where they will promote the goods of the non-resident person. They will ensure that the goods is sold to the prospective buyers, and out of the sale proceeds, they will get a commission from the non-resident person in foreign convertible currency. So he was asking me whether he will qualify as an exporter of service. The answer was very clear. It was very loud and clear that he cannot be classified as an exporter of service, because the place of supply in his transaction is location of the supplier. As per section 13 of IGST Act, the place of supply is the location where the supplier is located. Now the supplier is located in the state of Tamil Nadu. So, and for the transaction to attract as export of service, okay, the location should be non-taxable territory. The place of supply should be non-taxable territory. But here it was not. Hence, we concluded in a fraction of a minute, that this transaction cannot be treated as export. Now the second question was whether I have to charge IGST or I have GST. I was very sure that it's IGST transaction, and he decided to raise IGST transaction. But we warned him, saying that it is not IGST transaction, it is CGST SGST transaction. If you check Section 7 of CGST Act, that they have categorically stated that if the transaction, Section 7, subsection 5C, that they have categorically stated that where the transaction qualifies as the intrastate supply, then it has to be treated as only intrastate supply, though the transaction is with the with the person who is located in non-taxable territory. Here, the place of supply is Tamil Nadu. The location of the supplier is Tamil Nadu. It is a service transaction. So here it has to be only CGST, SGST. And to explain this further, we took the example of a hotel where a non-resident person visits India. Okay, when he checks in and when he checks out, when the bill is prepared, and no hoteler prepares IGST invoice, everyone prepares only CGST, SGST invoice because the place of supply for the hotel industry is the place where the hotel is registered. So it has to be only IGST, it has to be only CGST and SGST. It cannot be interstate supply. It has to be intrastate supply. And that classification, that determination, whether it is interstate or intrastate, has been carried out by the registered person. It is not by the officer. So the officer will visit and verify whether the nature of supply which has been taken, the tax which has been paid according to their conclusion, whether it is proper or improper. Okay, now taking this further, if I have paid CGST, SGST, okay, if I have paid IGST for the said transaction, I am an intermediary. I have paid IGST transaction. The officer has come and he has taken the law, Section 13, he has showed me, and now he says that, look, instead of CGST, SGST, you have paid IGST. So you have to pay the CGST, SGST component. IGST component, you have to go for refund. According to Section 77 of CGST Act and 19 of IGST Act, it is permitted. I need not pay interest. I need not pay penalty. Okay, I have to just pay the CGST, SGST and go for the refund of the taxes which I have already paid. But here, if you don't assess your transaction properly, then assume the officer has come after completion of 4 years. He has come to do the audit after 4 years, and he is identifying this. I will be paying CGST, SGST for 4 years, but I can claim refund only for the 2 years. Okay, the maximum time period for claiming the refund under Section 54 is only 2 years. Okay, so that also has to be kept into mind. Okay, now if the officer finds out Section 77, Section 19 of IGST is applicable, but if a chartered accountant finds out during his preparation of 9C, a chartered accountant who is preparing 9C has identified the transaction and he says that this transaction is subject to CGST, SGST. It is intrastate supply. It is not interstate supply. In those scenario, can he invoke 77? Can he take the benefit of Section 19 of IGST? The answer is no. The benefit of Section 77 and 19 is available only if the officer comes in, points out the transaction as interstate, which is otherwise claimed as or declared as intrastate. So Section 77 is only possible in case of officer pointing out the lapses. But if a chartered accountant has pointed out this lapses in his 9C, then the chartered accountant has to categorically report that this transaction is subject to intrastate supply, but it has been IGST has been paid. The IGST which has been paid can be refunded by the registered person, but with regard to the CGST, SGST, which is payable, it is still payable and it has to be paid along with interest. So that is the requirement of the law. That is the difference between section 77 and the other. Okay, in case of department audit, the benefit of section 77 will be available, but in case of audit carried out by the chartered accountant under section 35 subsection 5, I don't think that benefit will be available. Now coming to the third point with connecting to the outward supply is point of supply. The officer is expected to check the point of supply also. Okay, the officer is expected to check the point of supply also, because this point is going to give him or he has to pull out those transactions which has not been reported in time, and which will result into interest, We have seen in the year 17-18 where people have reported wrong values in GSTR1, paid wrong taxes in GSTR3B. Okay, and when we were doing the comparison, okay, as per the point of supply, we identified that there is a interest liability for those transactions. For example, a registered person has issued the tax invoice in the month of April 2018. Okay, but the taxes were not paid in the month of April because he was not having that money. He filed nil return in GSTR3B. In the month of May, he has shown he has shown that invoices in GSTR1. So in April month, GSTR1 was nil. May 3B was filed nil. But in the month of May, he has shown that invoices and paid the taxes for that. Since the reporting was done belatedly and the taxes were paid belatedly, there is a requirement of interest payment. Okay, the registered person has to pay interest for the belated payment of the taxes to the government of India. Further, with regard to the point of supply. Now coming to debit notes. I have raised a tax invoice in the month of April. But the supply value was 1 lakh rupees. My invoice was only for 40,000 rupees. 60,000 rupees I have not billed. 60,000 rupees I forgot to bill. Okay, or there was an error at the time of preparing the tax invoice. So in such circumstances, I am left with only one option, to raise another debit note. So I have raised a debit note, say in the month of September. The question is, in point of supply provisions, section 12, section 13 of CGST, they have not dealt with the point of supply of debit notes. So in such cases, what will be the point of supply for the debit note? Whether it is the date when it has been issued or it is the date of the original tax invoice. The answer was given by a Supreme Court in the larger bench, which is Central Excise Case Law of Steel Authority of India, where they have submitted that, okay, the Honorable Supreme Court has submitted that the point of supply in case of Central Excise, the debit note which is issued, the point of supply is the date when the original invoice is issued. The same rationale should also be adopted in GST regime, because look, the supply is already completed, and for that supply I have already raised the tax invoice. At that point of time, my liability was for 1 lakh rupees. But just because I have paid for raised invoice for 40,000 rupees, I have paid the taxes only for 40,000 rupees. I have deferred my liability. Okay, I have deferred the liability of 60,000 rupees to the subsequent months. In such case, there is a loss. There is a loss to the revenue, and this loss has to be mitigated by paying interest. So that is with regard to the outward supply. An officer is expected to verify these transactions with regard to the outward supply. He's expected to check the classification of the transaction, whether the classification undertaken by the registered person is proper, whether the nature of supply which has been booked in the or which has been reported in the return, it is proper. The point of supply which has been mentioned in the return is proper, or whether the reporting or the tax payment has been done in time. If it is done in time, no issue. If it is not done in time, then it has to be paid along with interest. Now, coming to the third area is reverse charge. Reverse charge. It is a very important area, and I know that every officer after introduction of GST is interested in this reverse charge, because they know that the dealers who are registered under VAT, they are not aware of this provision which was there in service tax and excise. So they have come across, or they have encountered various cases where people have not the taxes under reverse charge. Okay, now under reverse charge, what are the areas which the officers will be interested? First, they will be interested in classification of the supplier. The first point, they will be interested in classification of the supplier, whether the supplier is a registered supplier or he is unregistered supplier. Okay, why it is required? Why this classification is required for the officer? To determine whether the classification has been carried out. If it is carried out, then the self-generated invoice might have been prepared. If it is not carried out, if the registered person has not classified the transaction, okay, between the registered supplier and the unregistered supplier, that means self-generated invoice has not been prepared. And moreover, the documentary proof for availing the ITC for the reverse charge is not available. So by doing this, he is going to just say that I am not going to give you the credit of the ITC which you have taken on RCM if you have not done this classification. You cannot proclaim that every transaction was been purchased or it has been obtained from the registered supplier. If it is a registered supplier, then he is going to see 2 capital A and check whether the transaction has been reported in GSTR1 of the supplier, which is again coming in 2 capital A. If it is that case, then no issue, the credit will be permitted. But if it is the supply from an unregistered supplier, and where the registered person is expected under section 31 subsection 3F to prepare a self-generated invoice, if this classification is not done in the register, in the RCM register, he is going to deny the credit. He is going to deny the credit because he knows the self-generated invoice is not available, which means the documentary proof is not available, which is the important aspect in section 16 subsection 2. Okay, section 16 subsection 2, where they have told that a documentary proof or availing the credit should be available with the registered person. The second important aspect in this case is nature of supply. Here I always take one example of a transporter who is there in Delhi. Okay, we'll take the same example here. Nature of supply in case of reverse charge. I know that many people have done this mistake. Assume there is a supplier who is registered in the state of Tamil Nadu, supplier who is registered in the state of Delhi. This supplier is the goods transport operator, goods transport agent, GTA. Okay, a GTA from Delhi. Sheikh Abdul Samad, supplier, receiver, registered in Tamil Nadu. So I am registered in the state of Tamil Nadu. I have procured a goods from Delhi, and I have asked Mr. X, who is the supplier, who is the GTA in Delhi, to transport that good from Delhi to my premises in Tamil Nadu. Here, since the transaction is under reverse charge, it is the responsibility of Sheikh Abdul Samad to pay the taxes. So I have to remit the tax, and to remit this tax, I have to determine the nature of supply. I know that I have to remit the tax. but I have to determine the nature of supply. So what I do, okay, what is nature of supply? To determine whether it's interstate or intrastate. And what is intrastate? Where the supplier, location of the supplier, LOS, is equal to POS, then it is intrastate. Otherwise, it is interstate. Now, what I do, since I am going to make the payment, I have determined that LOS, which is me, LOS is I go to section 12 and check what is the place of supply for the transportation. There they have told the place where the registered location of the receiver is the place of supply. So the location of the receiver is Tamil Nadu. So since my location is Tamil Nadu, and as per section 12, the location of receiver is Tamil Nadu, the place of supply is Tamil Nadu, I have decided to pay CGST, SGST. And everybody has done the same in the year 17, 18, and 18, 19. Okay, and this is one of the major points which has been looked by the department officer, which has unplugged this by the department audit, and they are seeing very keenly on this area the nature of supply. Okay, and now when during audit, when GSTR 2 is verified, there the registered person, the supplier has filed his invoice as IGST liability, but I have not gone with this invoice. I have gone with my accounting entry, and I have decided that it is CGST, SGST. I paid CGST, SGST. Now the issue is in 2 capital A, when the officer is going to see, there will be a liability. But in my annual return, which I have filed, in my monthly return, which I have filed, this IGST liability is not available. Instead, I have paid CGST, SGST. Now, can I claim the credit of CGST, SGST? First question. Second question, can I avoid IGST liability? Answer is no. I cannot avoid the IGST liability. I have to pay that IGST liability with interest. And here, I cannot even take the benefit of section 77. Because that IGST liability is still payable. I have not paid it. Okay, so I have to pay that amount with interest. Now coming to the CGST, SGST, which I have paid. Okay, I have paid CGST, SGST. Can I claim ITC? Department officer can very well raise a question that since this liability is not a valid liability, since this payment itself is wrong payment, please go for the refund. And when I go for the refund, okay, the officer is going to deny me the refund, saying that there is undue enrichment. I have paid the taxes on one hand, and on the other hand, I have taken the credit of the taxes. Okay, so this credit which I have already taken will be rejected on one or from one side. I will be asked to pay the taxes for IT liability the other side. Okay, so this is with regard to the reverse charge. The third important point is again point of supply. Okay, what is a point of supply for the reverse charge? Many people are not aware that even for reverse charge, there is a point of supply. You are expected, a registered person is expected to pay their RCM within 30 days from the date of invoice, or within 60 days from the date of invoice for supply of service. For goods, it is 30 days, and for the service, it is 60 days. So if I have received the invoice, say on 15th of April, the invoice date is 15th of April, and this invoice is for the supply of service, then I have to pay the taxes. Okay, I have to account this transaction 60th day. Okay, before the completion of the 60th day, which means it should be accounted on or before July, April, May, June. Before June, okay, I have to account this transaction before June 15th and pay the taxes on 20th of July. If I don't do on or before 20th July, if I don't pay the taxes for this supply for RCM, okay, on the 20th of July, which is the due date for making the payment, then any time in the year, at the later point of time, any time in the year, I have to remit the tax along with interest. So if the point of taxation is not abided with, then there is an interest liability which has to be seen by the officers. But we have seen that in central excise and in service tax, the provisions were there even in central excise and in service tax, but the officers were not giving heed to it. But in GST, we don't know. There is a possibility that people will check the point of supply for the reverse charge also. If they start checking it, then I will tell you there is a good amount of interest which has to be paid by the registered person. I know people have not accounted the transactions in due time. And when they have not accounted the transaction in due time, there is the late payment, the tax also has been paid belatedly. And when the tax has been paid belatedly, it is subject to interest. Okay. Now that is with regard to the reward charge. The fourth area which is expected to be verified is inward supply. In inward supply, type of inward, okay, and we got the extension for filing annual return, okay, only because of this. We never had an inward register where we can mark the transaction as whether it is inward of inputs, input service, or capital goods. We never had the transaction, so we were asking for extension with the excuse that we never know that there was an intention that I have to maintain the transaction, accordingly. Okay, I have to maintain the document in such a way that I have to give the breakup of inputs, input service, and capital goods. That was the excuse which you are bringing, but the intention was already there. The intention was given under Section 35, subsection 1, where the Government of India has already categorically stated that a registered person has to maintain certain documents. As I told you that it is not a new law, it is just like a central excise. Okay. The inward supply, the registered person, the department officer is expected to verify the type of inwards. Okay. Whether it is a goods, whether it is a capital goods, or it is the input service. Why it is required? Because in case it is accounted as a capital goods, then the ITC for few transactions is not permitted. It is blocked. For example, construction of a building. Okay, ITC is not permitted. Repairs and renewals connecting to the immovable property. Okay, if it is debited to profit and loss account, ITC is permitted. But if it is capitalized, then ITC is not permitted. Okay, just because of that, it is expected from them to check whether it is input service, or capital goods. Classification as per Rule 42. We have filed one refund application. We filed one refund application for one of our client. Okay, so when we filed a refund application, the refund application was, the value of the refund application was reduced. Okay, the value, say I have filed the refund application for 1 lakh rupees. Out of 1 lakh rupees of accumulated ITC, refund application for accumulated ITC, zero dated supply. Out of 1 lakh rupees, I was given a refund of only 60,000 rupees. 40,000 refund was not given with the straight reason that I have not applied Rule 42. Okay, and how the officer have done this Rule 42? Okay, according to the officer, he took the ITC, the whole ITC, which I have taken during the tax period. Okay, in my example, it is 1 lakh rupees. So he has taken the whole 1 lakh rupees as the ITC. Okay, and against that, he did the calculation which is prescribed under Rule 42. So the whole ITC which was there, he considered it as a common ITC. Everything is common. And there was a small element, or I should say that sizable element of exempted supply during that tax period. Okay, which was reducing my refund by 40,000 rupees. So I got only 60,000 rupees refund. The reason was this reduction was only because the registered the department officer took the whole ITC, the credit which I have taken as common. He treated everything as a common, and why he treated it is not his fault. It is not his fault at all. It is the fault of the GSTR 3B, where I cannot determine what is common and what is 100% credit. Okay, but it is expected from me to maintain inward register where I can demark the transaction common and ITC which is attributable for the taxable activity. Okay, when we were doing this, we identified that the Rule 42 reversal was already done in the return itself, but the Rule 42 reversal was only contributing to hundreds of rupees. It was only contributing to hundreds of rupees, and Rule 42 is to be made has to be done only on common ITC. So we have to write a reply. The show cause notice was given, so we have to write a reply in full saying that the whole ITC which he has considered as a common is not common, and Rule 42 has to be applied only on the common ITC which is restricted to hundreds of rupees. And this, when we use the same calculation which he has used, okay, we get the value which has already been reversed in the GSTR 3B. Please ensure yourself, okay, and prepare inward register where you can demark or mark the transaction which are common for providing both the taxable as well as exempted supply. Otherwise, during audit, the officer is tempted to take the whole ITC as a common ITC, because his temptation is not wrong. Because since we have not marked the transaction as common transaction, he is going to take everything as a common ITC. He is going to apply the provisions, and he will be happy because the sizable amount of ITC will be reversed. So to satisfy the Rule 42, I have to maintain an inward register where I can demark the transaction as a common transaction or attributable transactions. The third element is abiding with Section 16(4) and Rule number 37. 16(4), it is my responsibility, a person who is a registered person's responsibility, to ensure that he takes the credit of only those ITC which is available to him. If the transaction belongs to the previous year, if the invoice is dated previous year, leaving the year 17-18, okay, if it is 18-19, then the maximum time limit for claiming the credit is September month of the next year. So the last return, the September's month return, I have to disclose that ITC. If I take the credit of that ITC, it is available. If I take it in the month of October, that ITC is lapped. Okay, 18-19 invoice pertaining to the financial year 18-19. The supplier has given me invoice, but I have not accounted because of some reason. I want to account in the month of September in my books of accounts, pay the taxes to the supplier and take the credit, permissible. But if I account in the month of October, though I have made the payment to the supplier along with the taxes, I am not permitted to take the credit in the next year, because the last date which has been prescribed in Section 16(4) is important. Okay. Now coming to the reverse charge, payment, can I make the payment in the next year? For example, there is a liability of 17-18. There is a liability of 17-18. I have remitted that liability in the year 18-19. Can I take the credit? Answer is yes, if it is before September's month return. You can take the credit before September's month return, otherwise no. The language which is used in the Section 16(4) is invoice, and in the rule the section 37 had also submitted that the documents for availing the ITC, also have suggested that it has to be called only as invoice. So the self-invoice is also to be treated as invoice, and section 16 subsection 4 is very clear. If the invoice is previous years dated, then the credit should not be permitted for after September's return. Now coming to the refund, the last aspect, refund, type of claim and satisfaction of the rules. Type of claim is very important. I know people have made a mess on claiming their refunds. For example, I am a registered person. I am a manufacturer of a garment. I have manufactured garments which I export. So for one of the transaction, I was asked by my receiver, who is located in non-taxable territory. Okay, he had asked me to purchase the product from Germany and stitch a shirt for him, or stitch a shirt. The order was for a shirt. Manufacturer. I'm a manufacturer of shirts. So he has asked me to procure the goods from Germany, bring the goods to India, import the goods to India, make a shirt and export it to him. Now, since I'm going to import the goods, and the same goods, okay, after completion is going to be exported, I checked with my CHA. I checked with my CHA, and my CHA has suggested to go with advance authorization. Okay, my CHA has suggested to go with advance authorization because I'm going to buy clothes which I will be importing. At the time of importation, I need not pay the customs, I need not pay the IGST portion if I execute advance authorization with the customs office. So I have brought the goods. I have manufactured the shirt. I'm going to export that shirt. Okay. So according to my CHA, if I go with advance authorization, the raw material can be procured without payment of customs, without payment of IGST, and the same can be exported. So I have imported the goods, but at the time of export, I have checked with my tax consultant, a GST consultant. Look, I'm going to export these goods. Can I go with payment? But he has not told his GST consultant that you have to go, that he has imported the raw material under advance authorization. He has neither paid the customs nor the IGST. Okay, since the GST consultant is very well aware of section 69 or 96, section 90, rule number 96, he says yes, it is like any other export. Okay, so the export has been carried out. The goods have been shipped with payment. The IGST portion which has been shown in the shipping bill has been refunded to the registered person. Along with the other exports, this consignment has also gone with IGST payment, and the money has come to the registered person. Now the question is, in Rule 9610, there is a condition which categorically states that if you have executed advance authorization, then at the time of importation, you have to pay the IGST portion. Okay, if you have taken the benefit of both the customs as well as IGST, then the refund under with payment is not permitted. But this registered person has claimed that refund. Now the question is, whether only that refund will be challenged or the entire refund after the advanced licensing benefit will be challenged. The answer is very simple. Though he has claimed the benefit of IGST only for one transaction, only for one single transaction, the whole refund which he got after claiming that benefit will be in question. He cannot claim the benefit if he has taken the advanced licensing. That is the provision which is there in Rule 9610. So once you have taken the benefit, the subsequent with payment benefit is not available. You have to go with accumulated ITC refund only. With payment under Rule 96 is not permitted. Rule 96A will come into force, where the registered, where the officer, the jurisdictional officer, has to categorically assess or check whether the goods have been exported within the prescribed time limit, or the money has been received within the prescribed time limit. Okay, so that is important with regard to the refund of taxes. Okay, so the officer, when he is going to visit, he is going to check the type of refund he has claimed, and if it is different, like there are various type of refunds, and if it is with payment, he's going to check 96 compliance of rule 96 sub rule 10. If it is without payment, then he is going to check two parts. First thing is he will check whether there is a proper letter of undertaking. Second, he is going to examine whether the condition which is given under Rule 96A and 96B has been complied with. So that is with regard to the self-assessment which the registered person has done. He is going to do the business. He is going to comply with these provisions. A provision with regard to registration, outward supply, RCM, inward, and refund. And to comply this, whenever he is doing a compliance, he is expected to leave the trail. And that trail is expected in GST to be left under outward register, inward register, and stock register. Under section 35, subsection 1, the law is very clear. The law has categorically stated that every registered person at his principal place of business, which means if I have 4 registration, if Sheikh Abdul Samad have 4 registration, okay, in different states, let's say in the state of Andhra Pradesh, Tamil Nadu, Kerala, Maharashtra, then at each state, I will be having a principal place of business. And at that principal place of business, I am expected to keep the trail, the trail of the transactions, which is expected in form of outward register, inward register, and stock register. Outward register, my GSTR1 is my outward register. The only thing is, the only difference between my GSTR1 and the outward register is, in my GSTR1, B2C transactions, I have given consolidated value, but in my outward register, it will be invoice-wise transaction. And I can have a track of the invoices which I have issued. Okay, and my outward register is different than my sales register. People always get confused between the sale register and outward register. My sale register will have only those transactions which is against consideration, but in my outward register, I should preserve the register in such a way that it gives me the transaction which is subject to consideration, a transaction which is not subject to consideration, a transaction which is exempted, okay, and transaction which is between the different registration of the same PAN. So all these four type of transaction is expected to be reported in the outward register, but whereas in my sale register, it will have only those which is in connection with consideration. Okay. Moreover, the exempted transactions will not be there in my outward register. Sorry, will not be there in the sale register because I pass those transactions using general voucher. So when I use general voucher, I will not get the transaction in my sale register. So it is expected in Tally, especially a software which is widely used by the registered person. If you want outward register to be generated from the software, then you have to use only the sales voucher. So when you use the sales voucher, it will ask questions whether the transaction intrastate supply, whether it is with the registered person, unregistered person. So what is all those things? It is nothing but the criteria which is expected to be available in the outward register. Now, inward register, again, as I told you, in Central Excise, we used to maintain 3 different registers, RG23, R23C, and service tax register, inward register we used to call. These 3 registers were maintained in the factories. But thank God, those 3 registers has not been asked to be preserved in GST regime. We are solely supposed to maintain one single register called inward register, which will help me to satisfy the officer in many ways. Okay, I can prove the receipt of the goods, which is a condition under section 16, subsection 2. I can take the credit only on the receipt of the goods. So it is available in my inward register. My inward register will have the date of receipt of the goods, will have the GRN for the receipt of the goods. Okay, so I can satisfy the compliance part of in connection with section 16, subsection 2. Second, I can satisfy rule number 37, which mandates me to pay the supplier within the period of 180 days. If I don't make the payment to the supplier within 180 days, then I have to reverse the ITC along with the interest. Okay, this register will give me that warning date, the cutoff date, on or before which I have to make the payment. Otherwise, I have to reverse the ITC with interest. Okay, stock register will help me to comply with the provision of section 17(5) clause H. 17(5) clause H deals with those transactions which occurs after the availing ITC. For example, theft, damage the goods, loss by fire. Okay, all these transactions, all this event which is prescribed under 17(5) happens after availing the ITC. For example, assume Sheikh Abdul Samad Ahmed has taken ITC for the stock, say mobile phones. So I have a mobile phone shop. I have hundreds of mobiles, and I have sold 100 mobiles. Assume I have purchased 100 mobiles. It is there in my stock. I've taken the credit, but one fine day, my shop was open and the mobile phone was stolen. One fine day, the mobile phone was stolen. In such case, I'm expected to reverse the ITC under section 17, subsection 5H. Okay, I cannot claim the credit of those goods which is not available with me. It is gone, it is vanished. So I have to reverse the ITC under 17(5)H, and that will be available. That transaction, the occurrence of the transactions will be available in the stock register. In manufacturing company, if you witness, every manufacturing company will carry out the stock count on 31st March at the year end. Why they do so? They want to check on the physical aspects of their stock and their book aspect. If the book is showing the higher stock and the physical count is lesser, then the difference were reversed in Central Excise. Okay, the SENVAT credit taken for those were reversed under Central Excise. The similar thing is expected even in GST, where the registered person, if he is a trader, he is expected to carry out the stock count in the year end, and if there is a difference, that difference has to be reversed in form of 17(5)H difference. Beside the principal register, the people are expected to even maintain the secondary registers like export registers, as we discussed. if the person is carrying out an export under LUT, letter of undertaking, he is required to satisfy Rule 96A, which says that the goods should be exported within the period of 3 months. Okay, if you have raised a tax invoice, it has to be exported within the period of 3 months. In case of services, I have to get the foreign convertible currency within 1 year. If not, then I have to make the payment with IGST. I have to make the IGST payment with interest. If I have not done that, then the subsequent transaction should be carried out only with payment. It cannot be without payment. I cannot take the benefit of LUT because I have contravened the provision which is there in the Act. So if I have executed an LUT, okay, I have raised a tax invoice for supply of goods, then I have to ensure that the goods is exported within the period of 3 months. If not, then within 15 days from the date, within 15 days from the date of lapse, that is end of the 3rd month, I have to pay taxes along with interest. Okay, if I fail to do that, then I have to pay the subsequent transactions. I have to carry out only with IGST payment. Okay, and this is expected to be verified by the registered by the officers. Import register. Again, a couple of days back, when one of my client was getting audited. Okay, one of my client was getting audited, and in the audited financials, in the profit and loss account, there was a commission expense. And in the table, in the notes to accounts, there was a condition where they have told that X amount of amount was paid as a commission to the foreign agent. Okay, so there was a amount which was paid to the foreign agent in foreign convertible currency. So the question which they have asked to the client was, look, there is a payment which has gone from India in foreign convertible currency, which means you have imported a service and you have not paid the RCM under GST. So when you not paid the RCM, I'm going to issue a demand notice for the RCM which you have not paid, along with interest and penalty. Since due to COVID, we professionals are not going to their client place, and it was the benefit for the officer. The officer told, you have not paid this, it is subject to taxability, you have not paid the tax, you pay now. The client also did the working. Okay, the client also did the working. They accepted to pay the taxes, but just before making the remittance, they wanted to check with us. So they sent the working to us asking, can we make this payment? Is this a default? Okay, can we make this payment? Is this the default? The answer was, please don't pay this amount. There is no default from your side. Okay, so why there is no default? Because first thing, to whom you have made the payment? Okay, I have made the payment to the agent who is located in the non-taxable territory. Though I have made the foreign convertible currency, the payment was done in foreign convertible currency, but what is the place of supply which is important? Okay, as per the import of service, the definition which is given in the IGST Act, import of service. Okay, import of service means, okay, that the location of the provider should be non-taxable territory. In this example, yes, the agent is located in non-taxable territory. Receiver should be a taxable territory. Yes, my client was located in taxable territory. The third point is important. Place of supply should be taxable territory. But here, the place of supply was non-taxable territory. Okay, intermediary. Okay, intermediary. For an intermediary, the place of supply is the place where he is located. So since the agent is located in a non-taxable territory, the place of supply is non-taxable territory, the definition of input of service does not get qualified. Okay, when the definition does not get qualified, why I have to make the payment under RCM along with interest and penalty? The issue with the client was he did not maintain this import register, which we have already told. We told him many times, okay, to maintain import register. Any foreign convertible currency which has gone from their bank, they have to maintain a record which will make them, where they can prove that this transaction is not subject to GST because the place of supply is non-taxable territory. If this import register was there, it was placed before the officer might have not claimed or might have not demanded the tax. But since this register was not preserved, there was a demand, okay, and that demand along with interest and penalty. Okay, to mitigate that, I suggest please maintain import register. Okay, the third register is RCM register. We have seen the importance of RCM register in previous slides, and advance register. When I call register, people used to say that where in the section it is written that you have to maintain these registers. Okay, especially with regard to the advance register. Okay, then I say please go and check the rule number 56 sub rule 3, where they have categorically written the word register. The word is available in rule 56 sub rule 3, where they want every person to maintain advance register. Okay, if you're a supplier of goods, that is a different, because now there is no tax on the receipt of advance if it is for the supply of goods. But if it is for the supply of service, then it matters. Okay, now coming to with advance register, at the time of audit, which we have encountered in service tax, because even in service tax the advance was subject to tax. Okay, at the time of audit, the officer has found that advances were received, but the taxes were paid at the time or after the completion of the supply. Okay, after the raising tax invoice, the taxes were remitted. Now the question here was, he told us that I have to pay the taxes along with interest on the advances. Okay, so he found out that there is an advance. I have received the advance, but against that advance I have raised the tax invoice, and for that tax invoice I have made the payment, but for advance I have not made the payment. So the officer was asking me to pay the taxes for the advance which I have received. Is he correct? Is he correct? The answer is no, he is not correct. He is not correct because though the point of supply says me to pay the taxes at based on the advances, but I have paid the tax on the tax invoice. Okay, so for this advance I have remitted the taxes, but which is belatedly. I have paid the taxes belatedly. So instead of claiming advance tax on advances plus interest, we submitted we will pay only interest, which was very well taken by the commissioner of that audit. He very well accepted our view, and he told that yes, it is only subject to tax. Even in GSTR 9C, when we are preparing GSTR 9C, we also have come across these transactions where people have got the money in advance, but instead of paying on advances, they have raised the tax invoice at the later point of time and paid the taxes. So for the delay, for the timing difference, okay, now only for the timing difference, the person should be penalized. Instead of asking him to pay the taxes again, I will pay the interest for the timing difference, okay, from the date from the due date of that advance to the due date of the actual payment. Okay, for that timing difference, the interest has to be paid. Now coming to section 65 of CGST Act. read with Rule 101 of CGST. It should be Rules 2017. It is Act. Okay. It says that who can undertake the audit? Audit has to be an undertaking by the commissioner of that jurisdiction or any officer who is authorized by the commissioner. So a superintendent cannot raise a tax invoice, cannot give the intimation, audit intimation. He can give the audit intimation only if he is authorized to issue an intimation to the registered person. Or normally the audit intimation is issued by the commissioner saying that the Mr. X and Mr. Y has been authorized by me to carry out your audit of books of accounts. Okay, so who has to undertake? It is the commissioner, right officer. Okay, is the commissioner. Where it has to be conducted? It has to be conducted at the principal place of business of the registered person. Okay, it has to be taken, it has to be undertaken in the principal place of business of the registered person. But after giving a intimation, the officer will not visit. Okay, he is just given an intimation. Visit will be done at the later point of time. How it has to be done? Audit has to be done after giving a proper intimation. Okay, 15 days time has to be given to the registered person so that he can give the all documents, registers, and details, so that the officer can study, can do the desk review, and prepare the audit plan for the visit. So 15 days time is given to the intimation is given 15 days before the date of commencement of the audit. So bottom line is 15 days time is given to the registered person to produce all the documents. Time limit, the audit has to be completed within the period of 3 months. Okay, it can be extended for next 3 months. So in total, the audit should be completed within 6 months from the date of commencement of an audit. Now, what is the date of commencement of an audit? Date of commencement of an audit means the date when all the documents has been produced to the officer to do his desk review. Okay, that will be considered as the date for commencement of an audit. Okay, unless if I go and give the data or documents in piecemeal, it will not be taken into consideration. You cannot tell the officer that you should have completed my audit within 6 months. No, we cannot do that. Okay, date of commencement is the date when all the documents which is required to do the desk review is given to the officer. Now, after completion, what will happen? After completion, the audit team is expected to give ADT 02 within 30 days from the completion of an audit. ADT 02 will have their audit findings. Okay, will have their audit findings. If there is no audit findings, they will give the blank audit findings. Okay, if there is an audit finding, the audit finding will be given categorically. And if there is a revenue leakage, if the audit finding is not being accepted by the registered person, which normally happens, okay, in that case, along with the ADT 02, it is the show cause notice will be issued under section 73 or section 74. But what I have heard from the officer friends are that they are going to issue the notice only under section 74, invoking section 74. 73 they will not invoke. Okay, when I asked him why, they told, look, I have given enough opportunity. We have already given an opportunity to the registered person to rectify their errors, omission, and commissioning by filing an annual return. So the annual return was an opportunity which was given to the registered person to rectify these mistakes, but he continued it. So by continuing that, okay, we have a point that there is a mens rea involved. There was an intention to commit the fraud. So since there is a mens rea involved, I will invoke 74 and I will issue notice only under section 74. 73 benefit will not be given. That is the view of the officers. So this is a broad aspect of section 65. Okay, section 65 also has subsection 5. Okay, subsection 5, a very important point. I don't want to bring it in the tabular form. I want to give you the verbatim of the section. Okay, the verbatim of the section is very important. During the course of the audit, the authorized officer may require the registered person to afford him the necessary facility to verify the books of accounts or other documents as he may require, to furnish such information as he may require, and render assistance for timely completion of the audit. This subsection is very important. If the officer visit the premises and if he wants to take the computer, okay, if he demands for a computer, if he wants to verify the tally, the accounting package, which is where the registered person is passing an entry, or a registered person has to give the access. He cannot deny that there is no authority to the officer to verify my tally. The officer does not have the authority to sit in my computer. No, you cannot do it. This is the provision which allows him or empowers him to exercise this provision and ask for the computer, ask for the tally. Okay, he can ask for the tally backup also sometimes. Okay, which a registered person has to give for the completion of the timely audit. Okay, so you cannot deny that I will not give the tally. You have to give if it is asked. Okay. Now, when the audit has to be at what are the periods of audit in service tax? Once they come, we know that they will come only for 5 years. Okay, in service tax they will come for 5 years of audit. In GST, the same provision has been brought down. Okay, the same provision is that if I have completed the audit in the previous term, then from the end of that previous audit, like if I've completed say till March 2018, then from April 2018 till today, okay, November 2020, the audit will be taken. Okay, otherwise the period of limitation which has been prescribed under section 73 and 74. 73, which I told you that it is not possible, it is next to impossible. They are going to take the audit only for 5 years. Even in service tax, this provision was there, 3 years audit, but nobody was doing it. Everyone was doing only for 5 years. Because of annual return, they are going to tell that we want to check whether there is any lapses. Okay, and I will take the audit only for 5 years. It is practically possible, but for 5 years, yes, the officer, if he is going to visit the premises, he will take the audit for 5 years. Okay, like central excise, EA 2000 audit, we used to call EA 2000 audit. Okay, in central excise. Similarly, there was a manual, audit manual, EA 2000. Similar to that, the GST also have GST AM 2019 audit manual. Okay, and according to that audit manual, the officer is expected to carry out these steps. Review the taxpayers' data. Okay, the first step is review the taxpayers' data. As soon as the audit is allotted to the registered person, to the officer, he is expected to review the taxpayers' data. He is expected to check the nature of transaction which the taxpayers have registered for, whether he is registered as a GTA, whether he is registered as a service provider, whether he is registered as a receiver. Some people have registered only as a receiver. Some people have registered as a wholesaler, as a retailer, as a works contractor. So it is expected from the officer to review the nature of business carried out by or the nature of registration a registered person has registered for. First. Second, take all the data from the portal which is available to him. Okay, check whether the return has been filed or it has not been filed. Okay, and take the note of the returns which has not been filed or filed belatedly. The second is desk review. After reviewing the taxpayers' data, he will issue the audit intimation in the prescribed form. After giving the audit intimation, 15 days time is given to the registered person to respond to the audit intimation. If the registered person does not respond to the notice which has been sent to him, a reminder will be given. A reminder will be given to the registered person. A proper follow-up will be done to the registered person for collecting the data, because only after collecting a proper data he can carry out the desk review. Okay, and based on the desk review, the whatever we have discussed previously, based on the desk review of the areas like registration, areas like outward supply, RCM payment, import payment, and refund of taxes, based on the desk review, okay, he will collute the data. He will collute the important points which he feels that has to be examined. Okay, and based on those important aspects, based on those important points, he will prepare the audit report, audit plan. Okay, the audit plan will be given to the commissioner, and commissioner will approve that audit plan. And after getting the approval, a due approval from the commissioner, a person will visit for verifying the documents in the premises of the registered person. And within the period of 3 months, he has to ensure that the transaction, not only the verification, but from the review till examination of audit para, the time period is 3 months. It is not the only verification. Verification can be restricted. At least in Central Excise, the year 2000 audit has given the time frame that a person can stay in the registered premises of the registered person for a maximum period of 5 days. But the time period is not prescribed in GST. So it is the maximum time period between which he has completed the whole transaction is 3 months. Okay, from the review till completion in MCM, monetary committee meeting. Okay, so the documents will be verified in the 4th stage, and in the 5th stage, the audit report will be prepared, audit para will be prepared, which will be discussed in monetary committee meeting. In monetary committee meeting, if the liability which has been identified by the department officer is accepted and paid by the registered officer, paid by the registered person, the audit para will be dropped and it will not be taken for the discussion. But if there is a significant audit para which has to be discussed, the commissioner will take that audit para and it will be put for discussion between the superintendents, and it will be discussed in length for issuing the notice under section 73 or under section 74. The documents which is expected to carry out the desk review. To carry out the desk review, the tax authority will be asking you to submit the return copies, which is very well. We have filed in their portal, it is available to them, but we have to submit the return copies. Now it is restricted to annual return and the 9C if it is applicable. Okay, 9C, an audited balance sheet and profit and loss account. Audited balance sheet, profit and loss account, along with the following documents: director's report, auditor's report, 3CD, and CARO report. Okay, the officers have been given a clear instruction in the audit manual to collect along with the audited financials, director's report, auditor's report, 3CD or 3CB, and CARO report. Okay, what they are expected to check in these reports. Okay, they are expected to check in auditor's report. Okay, in director's report, information on operation carried out. Okay, from director's report, the officer is expected to check whether the company is into the business of service or is in the business of transaction of goods. Okay, and if it is in the business of service, the type of business, the rate which is applicable to that service. Okay, he has to check on the classification part using the director's report. Okay, if it is goods, then they have to identify the type of goods which they are dealing with. Okay, they have to identify the HSN of the goods, the HSN which is used by the registered person, and based on the HSN, whether the rate is proper rate or improper rate. For example, hand sanitizer. Okay, hand sanitizer, whether it is a Mediclaim or whether it is a disinfection. If it is a Mediclaim, it is 12%. If it is disinfection, it is 18%. So what people have done, though it is previously it was used as a disinfection, now people have reclassified the same product as a Mediclaim after the Corona, and they started paying at 12%, but which was paid at 18%. Okay, at the initial period, but now
Kindly hold on. There might be some technical difficulty with the speaker.
Sir, I'm in.
Yeah, please.
Sorry, there was some Wi-Fi problem. Sorry.
Yeah.
Yeah. So for the desk review, the officer is expected to verify the 4 basic documents like director's reports, auditor's report, CARO report, and 3CD report. Okay, what he is expected from the director's report? He wants to know the nature of business which is carried out by the registered person. Okay, whether the nature of business is whether it is a goods supply of goods or it is supply of service. If it is a supply of goods, then he will be interested at the HSN level transaction, whether the HSN has been recorded properly, the classification part which we said, whether the classification of the goods has been done properly or it has not been done properly. Now we are encountering one famous example. Okay, the hand sanitizer. Okay, if the hand sanitizer is treated as Mediclaim, then it is 12%. If it is otherwise, if it is a disinfection commodity, then it is 18%. So previously, the people who were selling as at 18%, now they started selling at 12% and calling it as a mediclaim. Okay, so the central government and Supreme Court is also giving their judgment on this, saying that what should be 12% and what is 18%. Okay, for a mediclaim, I am of the view, if you want to treat the goods as a mediclaim, then it should be prescribed by the doctor. For purchasing a sanitizer, I don't carry the prescription from the doctor. So it is not to be charged at 12%. The proper rate is only 18. That is my view. Okay. So the officer will give his view, and during the audit, we have to encounter his view. Okay. If we try to classify the goods or a service in different head, then we should be ready with the proper notes to give him back, saying that no, this goods or this service will be classified in this head only, and the tax rate is proper. So the first counter will be on the classification. Okay, that is the reason he is going to check the director's report. And second important thing is there any inclusion of the goods during the period? Now, during COVID, we have seen many people, the people who are selling garments started selling face masks. Okay, now since the garment is subject to 5%, but the face mask, no, it is not the garment. Okay, it is something else. Okay, the rate differs, so I cannot charge 5% even for the face mask. Okay, and we don't know what type of face mask is this, whether it is made of cloth, whether it is made of plastic, whether it is made of glass material. Okay, or I have seen a face mask which is made up of what you call the material which is used for making the body parts of the two-wheeler. Okay, it is made up of that. Okay, so you have to check what is the material. Okay, so it cannot be 5%, it will be at a higher rate. Okay, so the officer will be interested in looking into the aspect of whether is there any new line of business which has been started. Okay, is there any change in the marketing policy? Whether during the audit period, whether any fire has happened in the company, whether there is a loss in the company due to fire. Why they want to know? Because they want to check whether the section 17(5)(h) reversal has happened or not. Okay, so this will throw the audit report, the director's report will throw the point saying that kindly check whether the registered person has reversed the ITC for the goods lost in fire, which is mandated under section 17(5) clause H. The last requirement from the audit report is the foreign exchange earned and spent during the year. Foreign exchange earned during the year. Okay, people used to say that, look, we have earned foreign exchange, so what is the problem? The problem is if you have raised an invoice for say $1,000 and you have received only $500. You have raised an invoice under the cover of a LUT, but you have received only $500. Okay, $500, but the invoice is for $1,000. So for balance 500, it is expected from the registered person to pay the taxes along with interest. Okay, within or I should say the compliance part of rule number 96 capital A. Okay, so we have to check, we have to prepare a proper export register which will prove that yes, I have raised an invoice for $1,000. I have received the foreign convertible currency for $1,000 to satisfy rule 96 capital A. And the last point, forex exchange spend. Okay, forex spend, as I told you that one of my clients got a call, means there was an audit where they told that you prove that it is not import or service. So we have to explain everything by giving the barracks. But if a proper import register was prepared, which will give a proof that the place of supply is non-taxable territory, that ends the matter. Okay, I need not have paid the taxes under reverse charge. Okay, the auditor's report, yet another important report which the department is expected to observe. Okay, here they will see is whether the chartered accountant has given a observation with regard to provisions. Okay, whether the chartered accountant, I have told only provision of obsolete item, provision for even tax liability. Okay, provision for tax liability during an audit, during a income tax audit or a company's audit. I have identified that the transaction is not exempted transaction. It is subject to tax. It is subject to tax. But the registered person says it is exempted. Okay, which I am not going to buy for. For example, warehousing of cereals, wheat, okay, wheat grain without skin. Okay, it is a cereal. Wheat is a cereal. Warehousing of wheat is subject to tax. Warehousing of agricultural produce is exempted. Okay, warehousing of agricultural produce is exempted. That means wheat with the skin, okay, which comes directly from the farm. Storing that is exempted till one particular time, or it is exempted. Okay, but cereal, storing of a cereal, wheat alone, exemption was given at a later point of time. I cannot take the exemption of that wheat for as a, or I cannot classify the wheat as the wheat as the agricultural produce. If I have done, if the chartered accountant has identified that no, this is not exempted, it is subject to tax, and he gives a recommendation to create a provision, but the registered person does not create a provision, he still wants to treat the transaction as the export. But the chartered accountant has wants to qualify this in his audit report. Then he will write in his audit report that the storage of the wheat is not exempted under GST. Hence, a provision of so much is expected, should have been created, which is not available in the books of accounts. That is expected from a chartered accountant. Okay, if that is written in the audit report, that will be taken into consideration, and an audit will be done on that audit para, on those lines. Goods meant for outward supply available in the stock were not recorded. There are means where people raise the tax invoices. Okay, people will raise the tax invoice at the year end, and the same invoices will be reversed in the next year. Okay, but when it comes to the stock count, the stock counts are not done. Okay, the goods which is there in the fixed in the stock register will not match with the goods which is originally available in the godown. Okay, if those transactions are highlighted in the audit report, that will be taken into consideration, and people will be asked to reverse the ITC for the differences of the stock report and the stock register and the actual findings. Internal control mechanism is yet another important aspect. If the auditor, chartered accountant, has reported adversely, okay, if the chartered accountant has reported adversely, then I don't think audit under section 65 will be taken. A proper investigation will be taken in place. Okay, if he finds a chartered accountant's report where they have reported adversely on internal control mechanism of a company, then he will take that report to the commissioner, and he will take the permission for carrying out 100% verification of the records and documents instead of doing the sample checking. Okay, the audit plan will be prepared in such a way that all the aspects which is there in GST is taken out, and if required, the commissioner will increase the team of 2 to 4. Okay, he has the authority to increase the team to carry out the audit. Okay, the third aspect is CARO report. In CARO report, the auditor has to give his comment on fixed asset records, physical verification of the stock, and the stock and the asset in disputed tax liability under various laws, and the records of unserviceable or damaged goods. Okay, the CARO report will be read by the officer to determine is there any deficiency reporting. If there is any deviation or observation given by a chartered accountant which is injurious to the revenue, then those areas will be taken into consideration. For example, fixed asset record. Fixed asset record, the chartered accountant has written that fixed asset record is not available. If it is written as not available, then the audit plan will be prepared in such a way to verify the capital goods from the inward register, to verify the ITC taken on the capital goods, okay, in specific, okay, and the officer will come and verify in specific the invoices of capital goods to check whether the capital goods was indeed brought into the premises. The credit can be allowed only when the goods are brought inside the factory premises or inside the registered place, inside the registered person's premises. So that they will prepare the audit plan accordingly. 3CD, the clause number 18, which speaks about depreciation of fixed asset, that will be checked to analyze whether the depreciation is claimed on the cost or it is cost plus ITC. Okay, so both the benefit cannot go hand in hand. If a registered person wants to claim the depreciation of the cost, then he is eligible to claim the ITC. But if he wants to claim depreciation on cost plus ITC, okay, then the ITC is not permitted in GST. So that important point will be covered under clause number 18 of 3CD. Clause number 27, ITC available and carry forwarded, that will be verified with the GSTR 3B, whether it is going hand in hand. If not, if there is a deviation in ITC availed and ITC carry forwarded in the informed GSTR 3B, then that deviation will be reported and the registered person will be asked to pay the taxes along with interest. Okay, clause number 21, prior period expenditure and prior period income. Prior period expenditure, there is an issue. Prior period income, I don't think any issue will be there in prior period income, but prior period expenditure, indeed there is a issue. If there is a prior period expenditure, they will check whether this is in connection with ITC, input tax credit. We have seen people booking their expense along with ITC, and during audit of GSTR 9C, a chartered accountant has qualified the 9C saying that ITC is not available in the books of accounts. Okay, one of my friend has come across the transaction where the profit and loss account was prepared in such a way that the ITC along with expenditure was booked in the debit side of a profit and loss account. There was no specific ledger called ITC in the books of accounts. So in entry number 12, the entry number 12A, 12B, and 12C, he was left with no option than to write 000, and he has written that the ITC claimed in the ITC claimed in the return is not available in the account audited books of accounts. But at the next year, when he was verifying, he found a prior period expenditure, an amount which was equal to the credit which was taken in the previous year. Okay, so this creates a problem. So that will also be taken into consideration. Okay, prior period income, if it is creditors written off. Okay, prior period income, if it is creditors written off, here we have to check. Here the officer is expected to check the payment connecting to rule number 37. Okay, whether the reversal has happened as a prior period income only because the supplier was not paid in time. If the supplier has not been paid in time, whether the ITC which has been claimed on the tax invoice issued by the supplier has been reversed or it has not been reversed. Okay, so if there is a prior period income which is in connection to the reversal of sundry creditors amount or closing balance, then the officer will check whether the ITC to that tune has been reversed or not. Okay, now clause number 39, cost audit report, if it is available, that will be taken into consideration. And clause number 40 is with regard to the ratio analysis, which is there. Now, In all, after carrying out the desk review, after preparing the awkward register, after preparing the audit plan and getting the concurrence from the commissioner, the officer will visit the premises to verify the outward, inward, export and RCM register. He will come and he will verify the documents issued with all the relevant aspects, which means to check whether the point of supply has been followed or not. He will check the nature of supply. He will check the classification, which is a very important aspect. Valuation in case of the supply is done between the related party. Okay, a supply which has been carried out between two related party. In that case, it is not the transaction value. They have to abide with the valuation rules. Okay, whether the valuation rules have been abided or not. And the last aspect is in case the goods have been sent on job work or approval, whether the goods have been brought back within the prescribed time limit or not. If not, then whether the tax invoice has been raised or not. Okay, so this detail with regard to the job work will be available will be available with the registered person who has filed ITC 04. So he will take the ITC 04 values and examine whether the goods have been received in due time or not. Okay, inward register, as we have already discussed, a claiming of input, whether the credit has been claimed based on the proper document or not will be taken into consideration. There are only 4 documents which has been prescribed in the GST law based on which I can take the credit. First document is the tax invoice issued by the supplier. Second document is self-invoice, which is also called invoice. Okay. The third document is the bill of entry. Fourth is input service distributors invoice. So the credit is given only based on these 4 documents. Okay. The registered the officer will examine whether these documents are in proper form. Okay, if it is proper, the credit will be permitted. If it is improper, if it is defective, the credit will be challenged. Okay, the second thing is time of taking the ITC. Okay, which will be compared with monthly return. Okay, we have observed during our audit, annual return audit, we have checked the value which is appearing in the books of accounts is lesser than the value which has been taken in the monthly return. Okay, we have examined that on monthly basis. When we did in total the value is matching, but when we go on monthly basis, the transaction which is accounted in the books and the credit which is taken in the return it's not matching, because there was a problem with the SAP. Okay, so as soon as the good was has reached the premises, the invoice was updated in the SAP. The invoice was updated in the SAP and the credit was booked in the inward register, but the invoice was not captured in the accounts. Okay, the register was updated, but when it went to the accounts, only at the time of making the payment to the supplier, the invoice was getting accounted in the books of accounts. So in such cases, we observed that the whole transaction, the monthly verification, there was excess ITC which was been taken in the return. So that excess, the department officer can very well demand to reverse. Okay, or I can always say that I had already reversed in my return in my inward register, and I have taken the proper credit, and what is required is to pay only interest. Okay, claiming rule 42 reversal, as I told you, if you don't maintain a proper inward register, marking the transaction which is attributable 100% for the taxable activity, and which is for the non-taxable act, which is for the common ITC, the officer is going to, or he will be tempted to take the whole transaction as common ITC. He will tell that at the time of audit, no data was given for me to do enough data was not provided to do the segregation of the common and the 100% ITC. Hence, the whole ITC was taken as common ITC, and on which the reversal has been carried out. Okay, so please be careful when you prepare, when you give the data to the officer. Ensure yourself that you mark the transaction as common and 100% attributable. Okay, compliance with Rule 37 ITC is compliance with Rule 37. The supplier, if it has not been paid within 180 days, and if in that cases the supplier has the ITC has to be reversed along with interest. But if I see today, okay, if I'm doing the audit for the previous year, like 17, 18, and 18, 19, there was a requirement to do the reversal, but reversal was not done on 181st day. But later point of time, the registered person has paid the supplier. In such case, I will suggest you to pay only the interest component for the timing difference, rather reversing and taking the credit. Okay, compliance with section 16(6) on sale of capital goods. Yet another important calculation which has been prescribed under section 18, subsection 6, when the capital goods on which the credit has been taken is sold, there is a predetermined calculation. Okay, that calculation has to be abided with. If not, then the registered person will has to pay the tax along with interest and penalty. Export nature of supply will be checked, whether it is zero rated supply, okay, or it is non-zero rated supply. And today, just before starting the class, I was going through an AAR where they have categorically suggested that if you are an SEZ unit, okay, this is the view which we were holding for long. If you are an SEZ unit, you cannot go for accumulated ITC, a refund of accumulated ITC. Okay, the refund is prescribed for the supplier to an SEZ unit, okay, who has supplied to an SEZ unit with payment, okay, or without payment. Only those people have been prescribed for refund. SEZ unit cannot apply an application for refund of accumulated ITC, okay, though they are providing zero rated supply, though there is a export of supply, they are not eligible to claim a refund. Okay, execution of LUT is yet another important aspect which has to be taken into consideration. Compliance of Rule 96 and 96A, now Rule number 96B also has come into play. RCM, okay, everything, okay, please ensure that you give a proper register. You give outward register, you give inward register, export register, and RCM register to the officer, okay, so that there is no doubt in his mind and he does not create any chaos. Or other, if in case of in absence of this register, as I told you, the RCM liability was demanded for the import of service, which is not an import of service. Okay, if there was a proper RCM register, if there was a proper import register, then the officer might have observed it and taken a call that it is not subject to GST under RCM or RCM under GST. Okay, but in absence of that, there was a demand. So please ensure that you maintain a proper register. Okay, so in RCM you have to check whether the activity falls under ambit of RCM. Okay, if it does not fall under RCM, I have paid the taxes under RCM. Can I claim the credit? Answer is no. If I paid the taxes under RCM, but it is not RCM, I am not eligible to take the credit. The officer can very well deny the credit. He can say, look, you have made the excess payment, go for the refund. And when I go for the refund, my refund will be rejected, saying that undue enrichment. Okay, there is a undue enrichment. I have already taken the credit of the ITC. Okay, so I have to be very careful that the RCM which I am paying is under the is proper RCM. Okay, taxes have been paid during the financial year. Okay, I have to ensure that the taxes also be paid in the financial year. If the taxes have been paid in the next year, the last date for making the payment is the September's return. If I fail to make the payment in September's return, then thereafter, at any point of time, I cannot claim ITC. No ITC is given on RCM payment after September's month return, according to section 16, subsection 4. Classification of the supplier, as we had already discussed, you have to classify the supplier as a registered supplier, unregistered supplier. Registered supplier, the documentary proof for availing the ITC is the registered supplier's tax invoice, which will be available in 2 capital A. And in case of unregistered supplier, documentary proof is self-invoice, okay, which I have to prepare. And if I have not done this classification, then that means I have not prepared self-invoice. That means I am not eligible to claim ITC because I don't have a documentary proof for availing the ITC. Okay, the proper document, we have discussed 4 types of documents: nature of supply, whether it is a goods or whether it is a service, we have to decide that, and ITC status, in whether I can claim ITC or I cannot claim ITC. These registers has to be given along with the supporting documents to the officers so that he can complete the audit in due time. Thank you very much. Thank you for the patient hearing.
Thank you, sir. Thank you very much. That was a really wonderful session on the audit by department and also documents that we have to produce. Sir, before going to the question and answer session, I have a question that whether department people are asking for the soft copy of our accounts, that is tally data that they are asking. They're having their own inbuilt software wherein if you place the tally software on that, they will get some extra information. Even it is there in the Service Tax Act also.
Yes,
to encounter the same.
So this cannot be encountered. In fact, if you see section 90, subsection 5 of the section 65 has categorically stated that you have to provide all the information which has been asked by the the officer to carry out his audit. So if he is asking for the tally software, we have to provide the tally software. We cannot say no. Okay, so the section itself has empowered him to ask for the data.
The thing is whether we can give PDF of the...
No, sir, we have to give only tally. We have to give only tally. If he's asking for the data, tally data, we have to give tally data.
Okay.
But yes, we can make a request. We can make a request if the tally is very huge, and if we feel that yes, the data which is there in the tally can be mishandled, we can ask. You can ask the ledgers which is required. I will give you all ledgers in PDF. We can make a request to the officer. And in Chennai, the officers are accepting that. Sometimes they come to the premises. They don't take the tally data to their office. They come to the premises. They verify the tally. Okay. If they want to take the data to their office, they take the data in PDF form or they take a hard copy.
So there are some places where centralized accounts are there. There will be placing the accounts in the online centralized server. So yes, where it is not possible for them, even though we give the tally data, they cannot access it as such. So like this, can we take a
PDF? Yes. We can make a request, sir, that due to security of the data, we prefer to give you the hard copies of the document. You let it run into pages. We can provide. I have said to one of the audit, I will not give you the software because it is SAP software. Even if I give it, it will not serve any purpose because you will not have the backend software to run that data.
SAP, we can plead it, but Tally we cannot plead it. That is the only problem.
Tally, but depending on the size of the data, depending on the security, we can request that I will give you the hard copies or a PDF forms, PDF data.
Sir, if it is possible for you to take up the questions in the chat.
Yes, sir. I will take the session questions, sir.
So if it is possible, try to take as many questions as possible, sir. Otherwise, you are not given the material to us so that I can place it in the...
I will send you the mail, sir. I will send you the mail. I will do that.
So that I can share it to my delegates. Whenever they have any that issue or something like that, they can mail it to you directly.
Always welcome, sir. Always welcome. I'll take the questions. I will take as much as questions as possible.
Thank you.
Some of the company is maintaining books only in head office, whether it is treated. Hello.
Yes, sir. It's good.
Some of the companies maintaining books only. No, the problem is if the people are going on writing messages, it is going up.
Yes, sir. That's what I blocked the session up to 7:30, sir. After 7:30 only, they are placing the queries.
Okay. So head office, whether it is treated to be complied with, sir, in GST section 35 subsection 1 has categorically stated that every registered person, though he have a centralized accounting, has to maintain a certain degree of accounts in his principal place of business for that state. For example, I have 4 registration in state of Tamil Nadu, Maharashtra, Karnataka, and Rajasthan. Okay, in each place, the transaction which I have carried out in those states, the data for that should be available in that state. Okay, if the officer visit the premises, the person and manager in charge of that office has to give the particulars of that state. Okay, at least you can maintain inward register, you can maintain outward register and RCM register. At least this is the least register which can be maintained, not the books of accounts in full, but at least these registers. Okay, because you, from that place, you are raising a tax invoice. From that place, you are incurring some expenses. You are receiving the invoices. In central excise, each factory was registered. And in central excise, each factory was expected to maintain the registers RG1, RG23A, RG23C, RG23 means input service registers. We were maintaining. Hence, this provision has been adopted in GST. So we cannot cut a sorry figure saying that, sir, there is a centralized accounting. No, nobody will accept. So we have to maintain outward, inward, RCM register. If you are dealing in goods, stock register also. Okay, this has to be maintained at each and every premises. Okay, at least at the principal place of premises. The other question is, all the registered place we have to keep books of accounts. Yeah, a register has to be maintained. Yes, 35 subsection 1 wants you to maintain one. Director residing in other state, then company's registered office attend virtual meeting. Sitting fees is to be paid. GST under RCM is applicable. Should it be IGST to be paid or CGST, SGST to be paid? Sir, it depends. Here I will, since sitting fees is paid to the director who is located in non-taxable in some other state, it has to be IGST. It cannot. It is intrastate. It is interstate, not intrastate. RCM under RCM, whether payment to casual laborers attract GST under reverse charge. In my view, no, it will not attract, provided you maintain the proper register. Sir, in my view, sir, my query is whether what if wrong input is availed, that is supplier gives IGST whereas input was wrongly claimed as CGST, SGST. Sir, if you have claimed a wrong input, then you have to pay that wrong input. Okay, the supplier has given you IGST. This IGST is eligible to set off the credit of SGST also, isn't it? But if you have claimed CGST and SGST, okay, which is not the intention of the law, so take it ulta. Okay, the supplier has given you CGST, SGST credit. You have taken it as IGST. That IGST is available to pay the taxes of SGST also, isn't it? Okay, so if that IGST belongs to some other state, the place of supply, say it is Maharashtra, you are located in Andhra Pradesh. Okay, so the IGST goes to the Maharashtra, and you have taken the credit of that IGST as a CGST, SGST. Okay, so in that case, that credit you will set off against the SGST also, which is not correct. Okay. Sir, whether a transporter is a GTO in any law, in service tax there was an issue. We were identifying whether he was a GTA or a GTO. Okay, goods transport operator. Okay, but in GST it is only GTA. Okay, you have to categorize a person as a transporter who is registered GTA, or he is non-GTA. If he is GTA, RCM will apply 5%. Otherwise, the GTA will charge 12%. In case of other terminology, when he is not issuing any document, you have to pay 18%. It is only hiring of vehicle. Okay. In roadside, we see people who stands with their lorry or a small truck. Okay, and I go book that truck. It is only hiring. Okay, it is expected from the truck owner to charge me 18%. It is hiring of transport vehicle. It is not GTA. There is no requirement for payment under RCM. On high C sales, being a part of turnover in common credit reversal to be done. Okay, high C sale is not a exempted supply. It is no supply. High C sale is prescribed under Schedule 3 of CGST Act. So it is no supply. So when it is no supply does not form part of the exempted turnover. So when it does not form part of exempted turnover, in my view, rule number 42 reversal is not required. We claim ITC on purchase, then closing stock value should be net of GST. So if you have claim ITC, then the closing stock will be definitely net of GST, because your GST is part of another input tax credit. In reference to Section 8A of IGST Act, GTA service to the registered person is the location of such person. Then CGST, SGST shall be payable, or IGST to be payable. Sir, here, as we have taken one example also, you have to step into the shoes of the provider of the service. Okay, you have to check the provider, what is his location. If his location, if he's registered, in my example, it was Delhi. Okay, he was from Delhi. Okay, I am from Tamil Nadu. So definitely it is IGST transaction. But what I have done, I have paid CGST, SGST, thinking that it is my liability. It is not my liability. It is the liability of the supplier. It is the liability of the GTA, which is IGST liability. I am only paying on his behalf. Okay, it is his liability which I have paid. So it has to be only IGST. Okay, it cannot be CGST, SGST. Client has not filed 17-18 annual return, which he supposed to file 9 and 9C. Now department has issued a notice for audit before the submission of information. Can we assist filing 9 and 9C? Yes. So department will ask the registered person to file 9 and 9C and then come. They are going to penalize that gentleman with 25,000. Okay, 25,000 for not carrying out the audit in due time, and there will be a late fees also. Okay, so there will be a 2 damage now. Okay, and it will as soon as they come to the registered premises, they are going to come with the audit para saying that this 9 and 9C has been filed belatedly. So why not to charge a penalty on it? Transporter is not GTA, but a transport charges comes to 2 lakhs per month. Whether GST is required to be paid under RCM. Sir, you have to check why transporter is not GTA. Just like that, I cannot tell you. Okay, you have to check whether he is issuing the consignment note or not, or any other document which has the particulars of consignment note. That is more than enough to call the person as a GTA. Even in the tax invoice, if he puts the particulars of consignment note, that is more than enough to call him as a GTA. Okay, you have to be under RCM. If the liability in GSTR 9 has been settled through DRC 03, should we show again the same in 9C, or should we just mention in the audit observation of 9C? If it has been paid, you have to just give an audit observation that it has been paid. The extra liability which has been accepted by the registered person has been paid through DRC 03. That is more than enough. The goods exported not accepted by the buyer was destroyed the same at the destination country. Do we need to refund? Do we need to refund claim? Okay. Do we need to refund claim? Do we need to reverse the ITC on purchase made against the export goods? So here, since the goods have gone outside the country, okay, the only thing is you are not going to get the foreign convertible currency. Okay, so here rule number 96B will come into play, where you have to refund the amount which you have taken from the government. Okay, so rule 96B will come into play. A person registered in Bangalore can input tax credit of IGST on a inward supply from Delhi be used to set off IGST outward supply of to Mumbai. Registered in Bangalore, IGST on inward supply from Delhi, okay, can be used to set off IGST of outward supply to Bombay. Very well, it is permitted, no issue in it. Can a clerical error made in entering data in GSTR 3B be rectified? The purpose of bringing GSTR 9 is that only. Okay, GSTR 9 is the opportunity which is given to the registered person to rectify his errors or omissions, commissioning in the in the returns or the statement which he has filed. Okay, so this error or omission can be rectified in the annual return. And if it is 9C, the chartered accountant has to give the observation of that error which has happened in GSTR 3B. Dealer having a turnover below the threshold limit of 40 lakhs, is he allowed to cancel the GST registration? It is being seen that the GST officer keep the cancellation pending on the ground that earlier assessment has not been done by them. They are allowed to cancel their registration, but the provision is there in the act, but it has not been brought into effect. Okay, they are allowed, but since it has not been brought into effect, the officer have the power to keep it pending. A common observation on LUT for claim of input should be a common observation in LUT for claim of input should be compliance or documents. It is document. Okay, you have to check the document of the LUT.
Sir, sir, take some important questions, sir. Not all questions.
That's what, sir. I'm not able to figure out which are important.
Okay, I understand.
In case of export of goods, invoice is prepared and returns are uploaded as per the invoice. Okay. Later, it is found that the consignment has short shipped. It is exported with payment. It is exported with payment of duty, and refund is received automatically because of the return filed. Taxpayer had received the extra refund that eligible. How to rectify? Pay the amount with DRC 03 with interest and submit a letter to the officer and retake the credit. Permitted. Okay, if the officer permits, you are eligible to retake the credit and file the DRC 03 with interest. I got the credit note from the supplier after 3 months from the month he has uploaded into a credit note. This was case before rule of taking 10% provision credit. Am I liable to pay interest for the late reversal of credit? No, sir. Once you have reversed the ITC, it is permitted. No problem. Interest is not demanded from you. Can I take ITC of Gujarat CGST in Tamil Nadu? If no, which provision restrict? Section 16 restricts. You cannot take the look. If you want to take the credit, you have to take CGST as well as SGST of Gujarat in state of Tamil Nadu. Okay, and the money which has not come to state of Tamil Nadu, how can you use that ITC to make the payment for the Tamil Nadu's liability? For a person registered in Bangalore, can an ITC, or this we have already discussed. So there are lot of questions with regard to GTA. GTA is getting commission. GTA is getting commission from the operator. GTA is getting commission from the operator for arranging load. Whether he is liable to pay GST on the commission, the freight is paid under RCM. Look, if the freight component is under RCM, but for the commission which he is receiving, he is liable to pay the taxes under forward charge. Srinivas sir, I think I have done. You can drop me this mail, sir.
Sure, sir. Definitely. I'll send you the chat box to you directly.
Yes, sir.
So that if there are anything important, you can take a call and send the things to the respective persons.
Definitely, sir. Or what I can do is, since I'm sharing my my presentation, my WhatsApp number is there, so people can even WhatsApp me their query. I can reply to them.
Fantastic, sir. Very good help for that. Okay. Thank you, sir. Thank you very much for gracing the things and enlightening us about the departmental audit and also documents to be submitted before you. And thank you, delegates, for your patiently listening and also active participation. Thank you, one and all. Tomorrow is the last day. Gaurav Gupta, sir, from New Delhi, and he's going to attend for the appeals. See, after audit is completed, when you got the order, so you ultimately you have to go on appeal. So everybody is expecting not thousands, lakhs of appeals. This thing, there is a lot of opportunity for each and every person. So kindly, please concentrate on the appeals part of this. Thank you, one and all. We'll call it for the day. Thank you, sir. Samath, sir.
Thank you, sir. I will drop the PPT.